I think we all try to hope for a more sustainable recovery going forward, but it's anybody's call. But as a whole, I think we do see quite a strong number in terms of export for March and April. I think the market's expecting a continuation, and hopefully when things recover a little bit better in China steadily, domestic consumption may be there to replace export as a key driving force for the GDP for the rest of 2023.
And Selina, we've seen a weaker start to trade for the mainland markets today in anticipation for those numbers. We've also seen a bit of a pullback in the Chinese currency. We've got a weaker fixing from the PBOC as well. When you look at the market performance, though, yesterday, that was largely said to be down to hopes of the recovery, really fueled by those banking stocks, as we've seen, of course, these cuts to some of those deposit rates. But do you think the sort of performance we saw yesterday is sustainable in terms of how investors are really feeling about this recovery?
I think the market looks for sustainability. And for now, it's quite uncertain because we can't tell whether or not the recovery can be sustainable going forward, especially when we move into the second half of 2023 and in 2024. Having said that, I think state-owned enterprises, including the banks' stock performance that we've seen, may be sustainable going forward in the way that a lot of them may benefit from one policy support, what government targets for going forward. And secondly, as a very consolidated or not as fragmented a sector for the state entities where they operate in, they may still benefit from, for example, revenue growth as well as earnings growth for the rest of 2023. And therefore, as a whole, for state entities' performance, we do expect sustainable performance for the rest of 2023. That would also include the banks, the oil and gas, as well as the telecom sector companies.